Welcome everyone to the 2014 Employee Benefits Series. My name is Gretchen Osborne and I am an Employee Benefits Manager here at Sikich. And I'm pleased to present to you today Understanding the Form 5500 Annual Return Report for your Employee Benefit Plan. Just a few housekeeping items before we begin. There's going to be a survey after the webinar, and if you have questions, throughout the webinar, we'll try to get to them at the end. If not, my email address will be available, and you can just email me directly, and I'm happy to respond to any individual questions that you have or things that you might want some insight or perspective. And with that, why don't we begin? Alrighty. So the webinar that we're going to be providing valuable information and resources to you. We won't be going through a 5500 line by line, but we're hoping, because that would be a day-long course, maybe even a couple days, but we hope to help you understand and evaluate your Form 5500 annual return report when you receive it. We hope that you can identify areas of operational compliance where there might be additional, where, with a little bit of effort, you might be able to make some changes if necessary for your organization. We're also going to, we just want to make sure that that your plan meets the annual filing requirements. And then, of course, we want to mitigate the risk of triggering any DOL or IRS audits and being assessed penalties. So what's ahead, we'll start out with some background, and then we'll go over the 5500 and the schedules. I'll show you a summary annual report. I'll tell you how you would file a Form 5500 in the schedules. We'll talk a little bit about record retention, and we'll go over some common errors and give you some ideas of how you can resolve Form 5500 issues and respond to any DOL correspondence. And then last, we'll go over some resources available to you. Just a little bit of background, just something very quickly. HISA, that's a federal law, and protects the participant's rights under an employer plan. So it covers both retirement plans and welfare plans. Also requires reporting and disclosure of the, so that's why we have Form 5500. And it requires reporting and disclosure of features. It sets minimum standards as participation, vesting, accrual, and funding. It requires accountability of the plan fiduciaries. One, a fiduciary, when we say fiduciary, we mean anyone who has discretionary authority over the plan's assets or the plan management. The ERISA gives participants rights to remedy their problems, and it also guarantees payment of certain benefits through the PBGC. The government departments that are responsible for enforcing ERISA are the Department of Labor and its administrative agency, which is the Employee Benefits Security Administration. And the Department of Labor is the agency that actually enforces the Form 5500. They administer the Form 5500. The Department of the Treasury and its administrative agency, the IRS, is also is tied into the Form 5500 information, as well as the PBGC. So again, the DOL and EBSA are charged with protecting participants' rights. They have authority over the plan fiduciaries. The DOL is administering the Form 5500 program. The Department of Treasury and the IRS are responsible for tax issues and the qualification of various benefits of a qualified plan. And then the PBGC is an insurance program that's responsible for protecting retirement incomes of defined benefit pension plans. The EBSA, the IRS, and the PBGC, they all work together to provide the Form 5500 annual return report. So what purpose does this Form 5500 serve? Well, it's an annual report to the government. It provides statistical information to all the federal agencies as well as Congress and private sector about benefits, trends, tax. It reports financial information about the plan to participants, beneficiaries, and the general public. And it demonstrates compliance with certain legal requirements. The Department of Labor and the IRS receive information from the form on the Form 5500 every 24 hours. They're posting very quickly. So the returns are used as a compliance tool, and that's something to keep in mind, that once it's processed through the EFAS system, it's up to date, and anyone can go in it and look at it. If you're wondering why you've been audited or investigated by the IRS or the DOL, well, you probably need to look no further than that 5500. After the 5500 is filed, the DOL will send thousands and thousands of letters or emails to plan sponsors requesting amendments or explanations of responses. Maybe you even received one of those that were, that they found their source was the Form 5500 and the supporting documents. So in some cases, the DOL will reject some filings because the Form 5500 did not include a required audit, or the audit wasn't properly attached. So we'll talk about some of those things where you can avoid getting one of those notices from the DOL. The most important question is, if you're here today, is what plans have to file the Form 5500? Well, if you're a retirement plan, a defined contribution plan, a defined benefit plan, an eligible combined plan, like for example, defined benefit 401k plans, you would have to file a Form 5500. Every benefit plan that's covered by ERISA must file annually unless they're specifically exempted by ERISA or the DOL requirements. If you're a welfare benefit plan, whether it be a health, dental, vision, life, you would have to file. DFE entities, which are trusts, accounts, and other investment and insurance arrangements that participants participate in, plans participate in, are also required to file the Form 5500 directly with the ESA. So in terms of the types of plans that are required to file the Form 5500, well, that gives you, there are certain ones that are exempt, and those would be for retirement plans. First of all, government plans. You're not required to file the Form 5500. So that's a very common question that we get. Government plans are not required to file Form 5500. Church plans that have not elected to have ERISA applied, they're not required to file Form 5500. IRAs and simple IRAs. SEPs, SAR-SEPs, 403B plans that are funded only with employee-elected deferrals and meet certain conditions, pension benefit plans outside of the U.S., unfunded pension plans for a select group of management or highly compensated employees that are meeting certain requirements, owner-only plans. These are the plans that are exempted and are not required to file Form 5500 or are eligible for limited reporting options. And they're all described in the Form 5500 instructions. In terms of welfare plans that are not required to file Form 5500, well, and when we say welfare plans, we mean health, dental, life, vision, scholarship, disability, and severance pay. These are plans that are covered by ERISA. So the plans that are not required to file Form 5500 would be any small plan that's less than 100 participants, a plan that's unfunded, fully insured, or a combination of both. So these are plans that are not required to file Form 5500. Government plans, they're not required to file a welfare plan Form 5500. Unfunded or insured welfare plans maintained for a select group of management or highly compensated employees, they're not required. Plans that are maintained to comply with workers' comp, unemployment comp, disability insurance laws, church plans, owner-only plans, these plans are not required to file Form 5500. So depending upon how benefits are provided, the plans can be split into funded and unfunded. And this next screen, what does unfunded mean? Well, unfunded means that the employer simply pays benefits at the time that the benefits are due. There's no separate trust fund or separate trust or fund, for example, like you would have with a Visa trust. However, if you have a separate checking account or, that kind of a fund, then it's permitted as long as the employer retains ownership. So in other words, an unfunded plan is a plan that pays benefits as needed from the employer's assets. Cafeteria plan deferrals held by the employers don't affect the unfunded status. So again, unfunded plans, that would be a plan that, where the employer simply pays the benefits at a time that the benefits are due, as opposed to a funded plan where money is set aside in advance to pay for benefits. Some notes about cafeteria plans. Cafeteria plan deferrals that are held by the employer don't affect the unfunded status. A cafeteria plan doesn't need to maintain a trust to hold contributions. What this means is that welfare plans within the cafeteria plan may be unfunded. COBRA payments or other after-tax payments do not affect unfunded status. And here's a nice little chart that I thought might be helpful to you. If you want to file as a large plan, you would be filing as a large plan if your plan is covering at least 100 participants at the beginning of the plan year. You would file as a small plan if it covered fewer than 100 participants at the beginning of the plan year. And again, I said a welfare plan that is unfunded or fully insured or a combination of the two and covers 100 or more participants at the beginning of the plan year must file Form 5500 in the required schedules. A welfare plan is exempt from filing Form 5500 if it covers fewer than 100 participants. Again, fewer than 100 participants as of the beginning of the plan year, and it's unfunded, fully insured, or a combination of the two. A welfare plan that is funded or uses a trust must file the Form 5500 regardless of the participant count. So let's talk about cafeteria plans. A cafeteria plan, first of all, no longer need to file a Form 5500 that was suspended. So what is a cafeteria plan? That's a separate written plan that's maintained by the employer for employees, and it meets specific requirements of the regulations of Section 125 of the Internal Revenue Code. It provides participants with an opportunity to receive certain benefits on a pre-tax basis. Participants in a cafeteria plan must be permitted to choose among at least one taxable benefit and one qualified benefit. So a qualified benefit is a benefit that does not defer compensation and is excludable from an employee's gross income under a specific provision of the code without being subject to principles of constructive receipt. Qualified benefits include accident and health benefits, adoption assistance, dependent care assistance, group term life insurance coverage, health savings accounts, including distributions to pay long-term care services. Is there a filing requirement? Again, generally there is no filing requirement for cafeteria plans. If you only have a cafeteria plan, you're not required to file Form 5500 or Schedule F. However, if you have a welfare benefit plan, you may be required under the Department of Labor regulations to file a return for that plan. So cafeteria plan no longer needs to file a 5500. However, the underlying welfare plan may need to file. If the cafeteria plan is a wrap plan for other welfare plans, then the employer only has to file one Form 5500. So the next question that often comes up is, how can you determine whether your welfare plan benefits are being provided under a single plan or separate plans? Well, the first thing you must do is review the documents and operations, and we can help you with that. If there are separate insurance policies for each welfare benefit, that does not necessarily mean that there are separate plans. You need to be aware of that. Some plans use a wrap document to incorporate the various benefits and insurance policies into one comprehensive plan. So if you need more assistance with wrap plans, or you're looking for a wrap plan document, my contact information will be at the end of the webinar, and I'd be happy to help you with that. Let's talk about Form M1. What is Form M1 anyway? The Form M1 is an annual report that must be filed by multiple employer welfare arrangements. In general, multiple employer welfare arrangements are arrangements that offer health and other benefits to employees of 2 or more different employers. Multiple employer welfare arrangements do not include collectively bargained plans. Plans that claim that exemption without determination from the Department of Labor are considered entities claiming exception. So for all welfare plans for the 2013 plan year, if you're filing a Form 5500, you have to include an attachment with your Form 5500 that's clearly labeled at the top of the attachment, Form M1 compliance information. The attachment has to provide responses to the following questions, and these are the questions. The first question is, was the welfare plan subject to the M1 filing requirements during the plan year? If the answer is no, then you can just skip the rest of the questions, but you still have to attach it. If not, then you would need to indicate whether or not the plan is currently in compliance with the Form M1 filing compliance, and then provide a receipt confirmation code. So Form M1 must be filed by March 1st, following the calendar year in which a plan operates. And if you have questions about that, this is something that is new for 2013, just give us a call and we're happy to assist you with that. Let's talk about the time frame of when Form 5500 is due. Okay, so for all plans, all the required forms, schedules, attachments are due by the last day of the 7th calendar month after the end of the plan year. The 2013 Form 5500 is filed for plans that begin in 2013. If the company sponsors the plan has a fiscal year, for example, say the plan sponsored is based on a fiscal year, the plan year is based on a fiscal year, then, for example, 7/1/2013 to 6/30/2014. Then for 2013, the Form 5500 is based on the 7/1 start date, and the original due date is January 1, 2015, and the extended due date would be April 15, 2015. An automatic extension of time to file the Form 5500 until the due date of the federal income tax return of the employer is available if certain conditions are met. And if you have questions about that, feel free to give us a call or just email me. There are also extensions for certain disaster situations, and there's a nice little link there on our PowerPoint if you're looking for that information. All right, so as I said, we're not going to go through the 5500 line by line. That's not the scope of this presentation, but I will try to point out some things that stand out that you may want to be aware of. So as you can see from this sample, the Form 5500, the very first part of it, it collects basic identifying information. So the name of the plan, you would always enter the legal name of the plan that fits within the space. And with EFAS-2, you would use the same name or abbreviation that was used in prior filings. Option 1B, the plan number. This is the number that's used with the EN by the IRS, the DOL, and the PBGC. The plan number of a terminated plan can never be used, so that's something to keep in mind. The effective date is the original effective date of the plan, even if the plan has been restated. So you'll want to double check the plan document or the adoption agreement to make sure that that is correct. The plan sponsor under 2A, line item 2A, again, you're going to want to use the complete legal name and mailing address. Use the P.O. box if the mail is not delivered to the street address. The plan sponsor can be an employer, For single employer plans, even if the document is a prototype or master plan sponsored by a trust company, it can be the employer. The plan sponsor can also be an employee organization or an association, a committee, a board, trustees. What's important to note is that the plan sponsor is the IRS's first contact for information. So definitely don't put your name there. You want to make sure that this is the correct information. This is the entity against which the IRS is going to assess any penalties. So you don't want to use your own name for that. Okay, and then for the EIN, you're going to enter the name, the EIN of the plan sponsor, the employer, or the entity. If the plan sponsor doesn't have an EIN, then you have to apply for one. So the EIN would stay the same unless it's changed, and then you would have to report the change. The EIN must be shown on all of the attached schedules. And then, of course, you have the business code. The plan administrator, that's the legal name and mailing address of the plan administrator as it's named in the plan document. All right, so the plan administrator here is not going to be the TPA administrator or the person in your office who you call the administrator or the bank trustee. This is the administrator that's actually named in the plan document. So check that plan document for the plan administrator. If no plan administrator is named in the document, then the plan sponsor is the administrator. Okay, and let's see here. On option number 4, here's where you're going to report a change in the plan sponsor. And this is really important. If you have a change in the plan sponsor, the EIN number, or the plan number, this is such a common mistake. Make sure that you report this here under line 4. To the DOL, if you haven't done that, it looks like the plans have not filed. For lines 5 and 6, where we're starting to give the participant counts, it's important to understand the different categories of participants. If we here at Sikich are preparing your Form 5500, we can help you determine the information that's needed here. Basically, line 5 is the beginning year participants, and it helps you determine if you have a large or small plan. This is not going to be necessarily the same number as line number 6D or 6F of the previous year of the 2012 return. You're going to have to adjust this number for changes such as if you have participants that are entering the plan on the first day of the plan year, that would impact what you input on line 5. Another possible adjustment is a plan that experiences a significant decrease in the number of participants as of the beginning of the plan year. That could be a partial termination and possibly an IRS audit. So you want to be aware of that. Participants on line 6, participants are counted as of the last day of the plan on line 6, last day of the plan year. Okay, and then if you go further down in codes 8A and 8B, you want to identify the plan features or the plan of the plan sponsor. These codes actually reflect the design of the plan, and each Form 5500 is required to complete the section. The forms, remember, are screened for consistency and completeness, and we've actually seen clients that have received letters because as the DOL compares information, that's reported within the Form 5500, it's not consistent with what has been entered as the plan characteristics. So be aware of it. That is something that they're looking at. Line 9, insurance funding. 9A is asking how fund assets are held or invested before payment. Okay. 9B is asking from where does the plan distribute benefits. And then in section 10, you would indicate all the pension schedules and general schedules that you have. Okay. And just for quick reference, I've listed here for you all the different schedules. We won't go over what they do, but just be aware that these are the schedules that you may have to work with or you may be reviewing when you receive your Form 5500. In determining the participant counts, you're going to look at active participants, retired or separated participants who are receiving benefits, other retired or separated participants who are entitled to future benefits, deceased individuals or with beneficiaries who are receiving or entitled to receiving benefits. You're going to look at that. That's the participant count is actually used to determine whether or not your plan is a small plan or a large plan. So you need to make sure that that is as accurate as you can make it. Plans covering more than 100 participants, 100 or more participants at the beginning of the plan year should follow the requirements for a large plan. Plans covering fewer than 100 participants at the beginning of the plan year should follow the requirements for a small plan. So there is an exception, though, that I want to talk to you about for these participant counts, and it's called the 80/120 participant plan rule. If at the beginning of the year the plan had 80 to 120 participants and filed a 5,500 for the prior year, then the plan can file on the same basis as last year. So in other words, if you filed last year as a small plan, you can file as a small plan this year if the plan has less than 121 participants at the start of the plan year. Okay? So this is just a quick little explanation of the 80/120 participant rule. And here's a nice little example of how it works. Might be something, a quick reference for you. So in 2009, say you had 79 participants, you would file as a small plan. Then in 2010, you had 100 participants. So that would be considered a large plan, but under the 80/120 rule, you could file as a small plan. Then in 2011, you had 110 participants. It's still a large plan, considered that type, but you could file as a small plan. Then in 2012, you have 121 participants. Now you're more than 120, so you would have a large plan. And then in 2013, now you would be 100. If you have 115 participants, that would be considered a large plan. If in 2014 you go down to 90 participants, it would be considered, it's a small plan, but you can file as large. So this is just a nice little example of how that works, the 80/120 rule. Okay, so let's talk about audits. And you know, it's important to note that an audit is required if the plan has more than 120 participants as of the beginning of the plan year, and if the plan was a small plan filing was done in the prior year. So how can you avoid a large plan status? Well, one thing you could do is you should monitor your enrollment or your participation in the plan throughout the year. And one of the things that you can do is you can, just look automatic IRA rollovers. That might be able to help you reduce the number of plan participants. Or if the plan provides, you can forfeit lost participants accounts. There might be a fee for terminated participants, but these are some of the things that you can do. Let's talk about Form 8955 SSA, just real briefly. This is an annual registration statement that identifies separated participants with deferred vested benefits. And this has to be filed with the IRS. It's not a schedule of the Form 5500. It's filed separately. So any plans, any retirement plans that are subject to risk of vesting requirements must file. The Form 8955 SSA is due the last day of the 7th month after the close of the plan year. Now we have a summary annual report. We want to talk to you about that. What is a summary annual report? Well, one of the things that I ran into when I was an administrator was after we would send out the summary annual report, it's a narrative of all the information that you have, all the information that compiles everything that we have in the Form 5500. And very often, and this is something that's required to go to each participant eligible for the plan and each beneficiary that's receiving benefits, just like you would with the SPD. So it has to be distributed within 9 months of the close of the plan year. And if the Form 5500 is extended, then the summary annual report must be distributed within 2 months of the end of the extension period. So it also must be distributed when the plan is terminated. So every year this will go out to plan participants. And this is something that you're going to want to be prepared to be able to explain to plan participants. Very often, every year when I would send out the summary annual report as a plan administrator, I would get phone calls from plan participants who would say, I can't believe I have this balance in my account. And I would always have to say to them, no. This is the balance of the plan. This is, this is a narrative of all the key information from the Form 5500. This is not your personal account. So be familiar with the summary annual report, what it has on it. Be familiar with when it must be distributed and the information that it must have in it. Speaking of information that it has to have in it, you must report on the summary annual report any assets that are held by a bank, broker, insurance company. If there's mutual funds, or if there's an insurance company investment, an annuity contract, these are the kinds of things that you have to have on there. You don't have to report on the summary annual report participant-directed investments if the participant receives an annual statement from the financial institution. You don't have to report qualifying employer securities or any participant loans that are satisfying the DOL regs. All right, so how do you file that Form 5500? Well, under the computerized ERISA filing acceptance system, or what they call EFAS-2, you have to electronically file Form 55, the 2013 Form 5500. The entries, just keep in mind, the entries are initially screened. You cannot file a paper Form 5500 by mail or other delivery service. It has to go through EFAS. The Form 5500, as I mentioned earlier, is posted to the DOL website, so anyone can search for filing. That's exactly what I do, is I go in there and I verify that it's out there once we file one, just to make sure that everything's in good order. There's a nice FAQ on frequently asked questions on the DOL website for the EFAS system. You should check out that website for the most current information each year. There's some links here, some good links here for you. You can also view the forms, the instructions, check out the EDSA and DOL websites for news and regulations. There's a helpline there. The IRS has a web page also that's helpful with information about Form 5500 delinquency notices, what they mean, why that notice was sent, what you have to do. So here's some nice little helpful links for quick reference. Let's talk about penalties. The IRS, for filing late, the IRS penalties are $25 per day, up to a maximum of $15,000. DOL penalties are up to $1,100 per day, and there is no maximum. So I won't go over all these, but just keep in mind that there are penalties for filing late. But if you are late on filing, if you have a delinquent Form 5500, there is a program that's been established to encourage voluntary compliance. And you may be able to even reduce the penalty by satisfying the program requirements. So the IRS webpage has information on the delinquent filer program. And if you, I guess what's important to know is that if the IRS sends you a penalty letter, don't panic. Don't call the IRS. Just amend that return and indicate that you're filing under the delinquent filer voluntary compliance program. And then just inform the IRS within that letter that you're filing under the delinquent filer voluntary compliance program. And if you need help with the DFVZ program, we can help you with those. We get calls frequently at the last minute where someone says, I received this letter, can you just handle it for me? And we take care of it for you. We walk you through step by step what needs to be done, and anything else that you need, any guidance or support that you need, we can help you with that. Record retention. How long should records related to reporting and disclosure be kept? Well, Section 1027 states that records are to be available for examination for a period of not less than 6 years after the filing date of the documents on which the information which they contain, or 6 years after the date on which the documents would have been filed, but for an exemption or simplified reporting requirement. So this is just a quick little tidbit here. It's important to retain the records. It's all the plan documents and your Form 5500. It's important to have that information so that if questions come up, you have them at your fingertips. All right, now let's talk about common errors. These are just some of the more common ones. The timing of contributions and loan payment remittances, that's big. So you want to make sure that you're paying attention, that your payroll department is set up properly, because there's a question on the Form 5500 where you have to actually indicate whether or not there was a failure to transmit any plan participant contributions. And then you have to also indicate the amount that were late. So if you have a plan that has late contributions and you need help determining what those late contributions are and you need help determining the lost earnings, we can help you with that. All right, if the plan's not covered by a fidelity bond, that comes up, and it comes right off the Form 5500. There's a questionnaire that asks you. Remember, the requirement for the fidelity bond is the lesser of 10% of the assets or $500,000. If the plan holds employer stock, then it's $1 million. The DOL generally says that the bond should be well in place before the plan files the Form 5500. If this is the first year you're filing, make sure that you just use the best estimate. If there's any kind of loss due to fraud or dishonesty, and that's reported on the Form 5500, that's a common error that that gets to the DOL, and they will contact you regarding that. Okay, Schedule A. The commissions and fees paid on line 2 and 3, those are reviewed by the IRS and the DOL to find violations of the exclusive benefit rule. We want to ensure that plans are for the exclusive benefit of the participants and their beneficiaries. So this is something to keep in mind when you're reviewing your schedules that you're receiving from your provider. Schedule A dividends are retroactive rate refunds that are reported as paid in cash. Obviously, that's something that might be a red flag. Schedule C, this is often an area that is very confusing. Who might need to even file Schedule C? Well, that would be large retirement plans and large welfare plans. Who won't file? Small retirement plans and small welfare plans, large unfunded, fully insured welfare plans. A common error on Schedule C is that it's not even submitted, even though the plan received indirect compensation. So you're going to want to be familiar with what we mean by direct compensation, indirect compensation, eligible indirect compensation. The distinction will impact the amount of information that has to be reported on the schedule. If you need help with Schedule C, we can help you with that. Other common errors are missing, inconsistent, or incomplete pension feature codes. We talked about that a little bit earlier. Again, no codes, the EFAS will not process. Sometimes a plan will inadvertently have checked the final return box when there are still plan assets at the end of the plan year. So it can't be the final return. That's a red flag. When there are funding deficiencies reported, that would be a red flag. Where some plans will sometimes report an employer contribution on the Form 5500, and unfortunately it doesn't agree with the actual deduction that was taken. So that's a red flag. That's a common error. A Form 5500 that has information, and we talked about participant counts earlier, that has, the information seems to indicate that there's a partial termination event. That would be a red flag. A Form 5500 that reports contributions to the plan, and yet there's no participants. That would be a red flag. Totals and subtotals that don't equal the sum of all the component amounts, that's a problem. So any missing attachments, any unfiled returns, these are the things that come up quite frequently. So if you received correspondence from the IRS, the DOL, the PBGC, and they tell you that there's a problem with your filing, and believe me, they can reach you to make sure your profile is, so make sure that your profile is current on EFAST. They have ways, they might even email you to communicate with you. They may contact you. Make sure that you know what to expect from a possible investigation. They could request copies of the plan and trust. They could request copies of the summary of the summary plan description. They might be looking for amendments, a summary of material modifications, any resolutions. They'll look at Form 5500 schedules and attachments. Once they have something that they want to look for, they could ask for any of these items. Typical problems that come up, once they start looking is maybe the plan hasn't been updated in a few years to reflect recent law changes. Sometimes that's what will happen is someone will send us a letter that they received from the Department of Labor and will say, well, send us all your information. And we'll immediately go into the plan and we'll see a document that maybe isn't signed, or we can see that the document wasn't updated for EGTRA. These are the things that can create problems once the DOL is aware through your 5500 filing. Maybe the plan sponsor will, in talking to them, will find out that they're not following the terms of the plan. Maybe they haven't filed, they haven't satisfied non-discrimination tests, or they haven't timely deposited deferrals. That's right on the Form 5500. Or sometimes what will happen is the plan sponsor is not even sure what the service agreement covers, and they may have 3 different people, 3 different providers doing things for them, and they realize that the Form 5500 was never even filed. And that's just because they're not aware, they're not managing the providers, and they're not aware of what the services are that are being provided. So what plan sponsors should do, absolutely contact us. If you receive an IRS or DOL notice, we can help. You might want to consider, and we do this for many of our clients, a compliance review where we focus on the plan and the actual operations. We take compliance very seriously. It's your duty as a fiduciary, a plan fiduciary, to make sure the plan is run prudently and in accordance with the provisions and in compliance with ERISA. So you might want to consider asking yourself some of these questions to just make sure that your plan is compliant. You want to make sure that the plan fiduciaries are reviewing the plan document to ensure that they're complying with the terms. Ask if the plan has been amended to comply with changes in legal and regulatory requirements. We're coming up on another restatement for the Pension Protection Act. Have your plans been updated? Do you need help with that, figuring that out? Do you need a restatement? We've got all that for you here. Have you communicated plan amendments to your plan record keeper? A lot of times that's where a problem comes in, where the amendment is made and the resolution is signed and it's not communicated through the chain of the individuals that are doing accounting and reporting for the plan. Do you timely remit the plan contribution amounts and loan payments withheld from your participant plan, from your participant pay? Have you checked that? That's something that's a big red flag, and it happens so frequently. Have you corrected any operational errors in accordance with the correction methods that are established by the Internal Revenue Service and the Department of Labor? Do you need help with that? We can help you with that. If you've encountered operational errors, have you established procedures to prevent those errors from happening again in the future? These are the things to think about. Identify and gather your documents when you have a problem to sort out the issue. Consider the time period that's involved. Prioritize the documents that are requested. Determine a point of contact who's going to be responsible for all communication so that everything comes through one person and they can coordinate the process. And of course, most importantly, contact Sikich. Karen Sanchez, she heads up our Human Resources and Employee Benefits Group. And my name is Gretchen Osborne. Our contact information is here. We're here to help you with any kind of correspondence that you receive from the IRS or the DOL. We can help you sort through it. There's just about, we can help you straighten out or fix anything. it's just a matter of getting all the information, gathering all the information, and going through what the problem is, and using our insight and perspective. And some other resources, of course, we have some links here for you. There's the Department of Labor, EFAS-2, the DFDC program, there's a link there. And then there's a link for delinquency notices. I'll leave that there for a moment. You can jot those things down. And I think that is it. Our next webinar, and you'll want to see this, it's a retirement plan design. Whether you need to create a new retirement plan, or maybe you're thinking about restating your new plan for PPA, now's the time to talk to us. We can get the options in that you need. We can redesign your existing plan. We can, if you're thinking of developing a new plan, we can help you come up with a plan that supports your business strategy and provides the right mix of choices for your current and future workforce. The webinar is going to be on August 13th. I hope you'll be there. It'll be from 12 to 1. And we're going to be sending you a PowerPoint of this webinar so that you'll have all the information that you need. You'll have all those handy notes. Of course, if you have questions, please do email me. I'm always happy to help. Or contact Karen Sanchez if you're looking for information about the other services that we provide under Human Resources and Employee Benefits. And I think that's it. Thanks so much for joining us.